So that gotta touch it mindset, you gotta get out of that. You gotta get wider and realize that there are a whole lot of other ways to make much better money for a lot less money and a lot less work. Okay, let's do another one. Okay, so let's talk a little about how we JV. And so this was some slides stolen from our investor pitch. And so, but our sole focus is to provide superior returns. That's how you make money, that's how we make money, right? We invest in non-performing loans. We invest in well-chosen assets. I think just by a glimpse of what we showed you, how we go about doing our business and doing analysis, etc., that shows that. We buy it at a deep discount. Clearly, deep discount, we do our homework. So next time we actually go to buy is interesting. The guy was actually telling me today, or yesterday, we had a good conversation. He said, you know, they know you're serious and they know next time that you've done your homework. There isn't any back and forth. They know when Dan and Sid put an offer in that it's an offer. It's a solid offer and we did our homework. We're not just throwing lowball offers out there, right? So we vetted ourselves as a vetted buyer. Once you do a deal with a hedge fund, they know you're legit and they'll know whether they want to mess around with you or not, right? So, and you can also shoot yourself in the foot with them too, trust me. So, and then rapid and flexible execution. You got to know when to execute, how to execute quickly, and you got to be flexible too. I was going to possibly flip that note, the one in Texas. I was going to flip it out to another investor. The guy I wanted to sell it to, or wanted to, actually he was going to help me sell it, wasn't answering the phone, so I just moved on and did my forbearance agreement, etc., and I'm getting cash in my pocket. I think the wire, I got a check, I don't know if it's in yet today, my first payment on that one. But you got to be quick and you got to be flexible. You got to decide, okay, what's a good exit strategy, but then don't get myopic on only one. So risk management, again, our due diligence process is how we reduce risk for us and our investors. And that's in the asset valuation, understanding how the quirks and vagaries of tax investigation on taxes, right, Ken? Mm-hmm. Taxes can be a little weird, right? Finding out how much tax you owed on properties. Mm-hmm. Right, Sean, how much time did you spend on the phone with the city of Baltimore?
Hours.
Right? Understanding that the assignment chain is intact. Okay, knowing your multiple exit strategies so you can decide whether investment is right or good. And you know, if you know more and are familiar with more, the more you can do and maybe still make a good investment where others have passed on it. Key partnerships with industry, these are very important. Again, it's a relationship. Relationships are important. So our deal structures. So the investor funds the acquisition. The investor funds actually the whole investment and investment-related costs. And the investor gets a 10% preferred return. That means you get paid the first 10%, and then we do a 50-50 split after all expenses. And other deal structures are negotiable depending on how big your paper bag is. So. Clear as mud, right? Everything? Any questions? Your head feels probably like you're ready to explode. You've been flopping around this mud, but there is money in that mud if you know where to look and how to get it out. So, and wading through these is a lot like wading through mud sometimes. I've stared at tapes till 2 and 3 in the morning trying to sort them out. And yes, I felt like that. So, looking for that dollar. Okay, any questions? Now, I appreciate everybody holding their questions, and so if you're still awake, let's fire away. And your name is?
My name is Ben.
Ben.
Yes. I just have a quick question. Right now, we see a lot of good example, very excellent return, but as a conservative investor, I would like to see what is your, do you have a scenario for like worst case scenario? So if somebody still not pay, they're not going to do anything with you, you have to go to a short sale, you have to go to the foreclosure, especially in the judicial state like Florida,
Correct.
Baltimore.
Correct.
Then what will be the scenario for that? Do you have?
I have those in my spreadsheet, and I build up my spreadsheet, that complicated spreadsheet. I'll give you a quick glance at it and show you, but let me, at a high level, my worst case scenario is having to foreclose do some rehab, and then rent the property. That's the last thing I want to happen, but so that is my worst case scenario. And I build my bids to make sure that I am at least 20%, 10 for me, 10 for the investor, because that's my break-even point, where with a 10% preferred, we're getting an equal share. So my worst case scenario is that I've met that investor's requirement and still getting some of mine. But that's my last, that's way down my list, right? There's so many other ways that I want to get out of that asset before I have to actually turn it into a rental and spend money on top of money. Foreclosure money, then rehab money. And then, you know, sit and letting it listed on the market as a rental. So yeah, that is my worst case, and that's what I do. Again, that's where I draw the line. Now, will I go for an investment that my worst case is less than that? Especially if I know some details about some of the legal, like in this negotiation, the one we did. We actually got to talk to the lawyer on some of these cases. So one of them, because the price went up a little bit or whatever, and a couple things, the worst case got it was like 15%, 16%. But my most likely was that I was still going to make 40%. So I'm okay.
Is there any chance, just remote chance, that you bought a note and then you have an issue with the homeowner, and so got into legal issue,
There's
lawyers
always a remote
involved, and then
chance.
all bets are
Of
off?
course. Is there a remote chance that the first week you put a renter in your townhouse that they burn it down? I mean, yeah, there's always a chance that something's going to happen. This is investing. It's the nature of investment. There's an element of risk to everything. If you don't want to take any risk at all, you need to go find something else to do, right? I mean, really, you know, go to your JOB job, or oh wait, I know how to have no risk. Invest in the stock market. Oh wait, no, maybe you shouldn't do that. No, again, there's always risk. I don't mean to be facetious or anything, but yeah, of course. Ask a lawyer. You know, there's always risk in something. There's no guarantees in life or anything. And there's also, as our mentor says, there's no crying and no buying. So.
And I'll tell you, it is the only thing that is actually secured with an asset. Real estate is the only thing that is secured. You can't do any other investments out there, stocks, bonds, nothing that is secured. You actually have a tangible piece of property that is secure.
I have the law on my side.
Yeah.
I can't go make Apple give me, you know, an iPad or something because I have a share of stock and it went, you know, down or something. I mean, I can make the sheriff go kick that person out of that house, and then I have the asset, right?
And I'll tell you.
And the basement could be full of water. There could be a big crack in the foundation, or whatever it is. Yes, it's risky. It's possible. Of course, it's possible.
But plus, we're buying them at a deep discount, and we're having agents from that area go to the property and look at the property and tell us if it's vacant or occupied, and if the house is still there. So we do a lot of due diligence to make sure before we build.
On a higher value asset, I mean, if I was buying a tape of 100, I probably wouldn't pay for a BPO for every one, right? I might pay $15 for a CMA for the lower asset. So I rank them and pay only on a few, the ones I know I'm going to make the money off of, and I take a little bit of risk on the others because those are the ones I'm wholesaling to carry. Go ahead.
Do you have a preferred exit strategy, or is it just
Yes,
whatever
perform the
strategy?
note. Get them performing again. That is the preferred. That is the highest return on investment. Okay, so I'm going to make selections on occupied properties if I can, preferably owner occupied. Okay, so the ones that we're bidding on here, of the 5, 2 were owner occupied, 2 were renter occupied, 1 was vacant. Okay, and so anyway, that's.
And how does a JV work when the note is reperforming?
When it's
So, I
reperforming.
mean, is it 50-50?
Well,
So
it's
if
still
390 a
50-50,
month,
so
is it-
cash flow would be split,
Okay.
okay? But our exit is then to sell the note at the end of our
Okay,
JV
I see what
period,
you're
right?
doing, yeah.
To sell it off. Now, we can have a buyout agreement that, okay, if you want to keep it as a performing asset, you know, you'll pay your share of it at some market value, and we have like a 4-page JV agreement that, so anyway.
Who do you see?
He's bigger than you.
Do you do second notes, and is there more due diligence on it?
We don't do second notes, and yes, there is more due diligence, and it's different. So I'm not an expert in seconds at all. I know some that are. If you really want to know, I can point you in the right direction.
So when you have a note, how do you advertise to sell the note once you own the note? Once you want to get rid of it?
I call Gary. Or, you know, auction.com. I mean, I can, there's a lot of ways to advertise. Other note investors, you
Now,
know.
once the note is performing, there's hedge funds that will buy performing assets.
Yeah.
So once you get it performing, then.
Yeah, there are people who want that performing asset, absolutely.
And you know, another thing that is not touched on a lot is there are so many people that are underwater right now. I have 3 short sales that have been going on for over a year, and I wish to God I would have an investor buy them so he could stamp that paper and go, okay,
Right, because
I just made $40,000 in a week.
because I can decide in 5 minutes, because I've already done all my, you know, that big long spreadsheet. I know exactly where I want to sell that asset at if I can. And if it looks at it and it's not at that number, I'll call up Sid, I go, hey Sid, they want to sell at 35 instead of 39. You okay with that? We go, well, what's the ROI? What, you know, and they'll ask me to fire 5 questions at me, and I'll click on my spreadsheet, and I'll go, yeah, it's this. We're still at like 27%. Okay, do it. You don't know when you're going to get the next chance, right? So that's why you got to be flexible. That's how we can be flexible.
You literally buy it, and you approve that short sale, and you're going to closing.
Yep.
You sold it like that. You already had a buyer for it. And a lot of people don't realize, you know, this is an industry that has stopped foreclosing. They've stopped the foreclosures because they can't keep dumping them, and they also can't have them as liabilities on their books. So they're selling these notes at deep discounted rates. What a lot of people don't understand is, you know, the banks have criteria. You know, at 7%, if they're defaulted 7%, the government can come in and shut down a bank. So usually at like 4%, they're like dumping these notes left and right to get them out of there because they don't want the government to come in and shut these banks down.
Well, plus on top of that, there's reserves that President Obama had put with the bank. So if you got $1 billion worth of bad assets on your books, you have to hold almost 6 times. That means $6 billion to the side until that $1 billion is gone. So there's reserves that are being mandated now.
So you target the smaller banks and like the local banks?
We're working with hedge funds mostly, and a lot of the banks, again, the industry's really changing. We didn't go to Noteworthy recently, but Dale just did. Ken's partner just did, and you know, I talked to some others. So, I mean, I've been watching this for a while. I mean, in this for a while, and it's changing drastically even as we speak. So, you know, banks themselves are now selling more to hedge funds, and they're also asking more. So, hedge funds are trying to park money, so they're doing things like buying big tranches of loans. So, eventually, that sifts its way down to us, though, because I was actually going to do a waterfall display where Bank and Fannie Mae sells to Blackwater. Blackwater, you know, takes what they want and sifts and sells to FCI Exchange or Granite Loans or something like that. And then Granite Loan puts them out and I can buy them. So it's a waterfall effect, and it kind of flows downhill, so to speak, right?
It's hard to get from a larger bank though, right?
It's almost impossible. You will not get one from a larger bank. You will never get one from Bank of America, Citibank, you know, Wells Fargo. You're not going to buy a note from them.
Yeah, they sell to the hedge funds. Because they have to, like when they dump them, they have to have millions of dollars sold at one time.
Yeah, unless you got 100 million,
Yeah.
you don't
you're
have
not
a chance
gonna-
with a large bank.
Yeah.
You gotta come
Got
in
100
big.
million? Got 100 million? We'll talk to Bank of America. Ready?
Okay, so, yeah, like.
I want to party with this guy.
Yeah. You might want to point out too, Ken, that once you buy a note, you are the bank, be the bank that you are. All the laws that apply to the bank now apply to you.
Yeah.
For instance, just simple things like allocating credit when you make a payment. If you don't do it within 24 hours, you can be sued and pay a huge fine. There's 750 new laws went into effect this year. You're the bank, so you're far better off to use a servicer for $50 a month.
Exactly, yeah.
Don't
Why
do
you
it
use a
yourself.
servicer?
Right.
Why you use a servicer? There are people out there handling
That's all they
thousands
do.
of their own loans. more power to him. I know somebody that, again, he has a storage locker in Texas where he keeps all of his collateral files, and it's like, oh, no, not me, so.
But if we invest with you, you're setting up the servicer on our behalf, right?
Doing everything. No, so here's how, you're protected by, we are both, our entity and your name, or your entity, or whatever, are both on the assignment of mortgage and the allonge. We are like in co-owners, so to
It's
speak.
like a joint venture.
Yeah.
It's a joint venture. We are joint venture partners. We're doing all that stuff. You got money in your self-directed IRA, you want to be able to sleep better at night, come talk to us. Any other?
Contact information?
Absolutely.
Well, we got a couple of cars
A
here.
lot of cards. Oh, no!
Come on, cookie cards, how about that?
So,
Thank you guys for being here tonight.
Be the bank.
be the bank, and we're chanting on the way home. Chant on the way home.
And can I just say, next month's topic will be legal. It will be more about how to sell LLCs and closings and all this crazy stuff that we do that apparently we don't know. So I really want to talk about contracts and all that stuff, because it's coming back around to me again.
You don't know where the lawyer at that closing is.
I know, like when I have a lawyer calling me asking me how to close the deal.